All right, all right. It's great to see everybody here. First thing in the afternoon. I wanted to say first thing in the morning, then realized we're in the afternoon. First thing in the afternoon. We got a whole new class coming in to our day trading class at the university. And so this is the lab for our university. And I'm very happy to have you guys all here. I love coming and doing this. It's so much fun. And had a wonderful class last night. And that gave us the ability to come in and start our new day trading class. So we got a bunch of new students want to do a little day trading. And so we went through and we started to introduce them to the concept and the idea of getting in here and sitting in front of the computer and clicking the mouse button to make money. And that's a fun thing to do. We all like to do that. That's why we're here. And so we're going to start kind of from the very beginning and just kind of outline what's going on here on the screen. So those guys who are new and getting started can catch up to us. All right. So the first thing we see is up in the upper left-hand corner. This chart is a representation of the S&P 500. Now the S&P 500, I'm going to give you one guess at how many stocks are in the S&P 500. That's right. There's 500. All right. Up in the upper right-hand corner is the Dow 30. I'm going to give you one guess at how many stocks are in the Dow 30. That's right. It's an index of the 30 big stocks known as the Dow Industrials. All right. Down in the bottom left-hand corner is the Russell 2000. And again, that is 2,000 stocks, generally small cap stocks. So they're small. So these are indexes. They're not individual stocks on their own. It's not like trading Microsoft or Apple or Amazon. These are indexes. So the one in the bottom right-hand corner is called the NASDAQ 100. And as we talked about last night in class, the NASDAQ is another clearing firm or another. I hate it when things slip my brain. It is an exchange, another exchange out in New York. All right. So we have the New York Stock Exchange, we have the NASDAQ Exchange, we have the American Stock Exchange. And the NASDAQ is the top 100 stocks trading on the NASDAQ. And they are primarily, as you remember from our last night's class, they are primarily and they are the high tech stocks like Apple and Amazon and Netflix and Google and those are the stocks that are in the NASDAQ. So those are a lot of fun to trade too. And again, it's an index, so it's not the individual stock. It's a conglomerate or kind of a basket of all those stocks. These are ETFs. Actually, these are not ETFs. All right. If we were in the stock market, they'd be considered ETFs. We are actually not in the stock market. We are in the futures market. So let me change that little marquee down there at the bottom and tell you a little bit about what we've got going on here. So this is the little marquee at the bottom. This is not the New York Stock Exchange, even though we are trading stocks. So we're trading stock indexes. So this is the Chicago Mercantile Exchange, all right, that we're connected to. And we talked a little bit about that last night in class. One of the reasons why you might want to trade over in Chicago rather than out in New York is the pattern day trading rules. So in New York, if you're going to trade the individual stocks and you want to day trade them, then you have to have a minimum of $25,000 in your account. That's called the pattern day trading rules. And so $25,000 in your account sometimes kills the dream of many people who want to do this. And in reality, you can't even just do it with 25,000. You have to have probably about 30,000, because if you drop one penny below 25,000 and you execute a day trade, they lock your account. They actually shut it down and freeze it for 90 days. 3 months, you're kicked out of the market. It's kind of like being a hockey player and thrown into the booth, thrown out of the game. You're in the penalty box for making a day trade. Now they do let you have in the stock market. They do let you have 3-day trades a week. 3-day trades a week. All right. Now they're trying to change that over there and make a few minor changes. They haven't done it yet, so we're gonna have to wait and see what happens. But they're talking about making a few changes. We'll see what those changes come to be. But as you can see, the markets are kind of rocking and rolling right now. And so there might be some opportunities for us to get in here and trade. Now, we want to look for our reoccurring price patterns that we talked about last night. We want to draw our trend lines. We want to look for opportunities. We want to look for breakouts where we think markets might move to. I've got turned on here. What you're seeing is the indicators. Oh, I wanted to mention before we moved on, there are no pattern day trading rules over in the Chicago markets. So if you want to trade in Chicago and day trade, you can't trade individual stocks like Microsoft and Apple and Amazon, but you can trade the indexes and you can trade a bunch of other things like gold and silver. We pulled up this list last night in class, and we got natural gas, we got hogs, we got NASDAQ, we got heating oil and crude oil, we got palladium and platinum, silver and gold and soybeans, soybean meal, Canadian dollar, Bitcoin, Dow Jones, corn, wheat, all kinds of fun things you can trade. And for scalping is what we're going to do today. We're going to do a little bit of scalping, which means we're just going to stay in the market for a short period of time, 2 or 3 minutes, 5 minutes, 10 minutes, maybe, if we can stay in that long. That's a long time for a scalp. So we're just doing a little scalping this morning or this afternoon on these short-term markets, as we only have about 1 hour before the market closes. Now, as we talked last night, a day trade would be something where you might want to get in and stay in for, hours on end throughout the day. But a scalp is something where we're only in the market for a very short period of time. If we're in a market, if we're in a trade for over 5 minutes, um, you know, and we're scalping, that baby's got mold on it. So um, we have to take into consideration what's happening in the market and what time frame we're looking at. Now, right here, we're looking at a very small time frame. You'll see it's range bar 6. This is a little itty bitty time frame. All right, so each bar represents 6 minimum moves in the market. And the reason I like range bar 6 is because it'll break up large bars into individual smaller bars, and so you have a chance to move your stops more aggressively and protect yourself a little bit better when you're trading on these charts that have big bars that move in them. A lot of movement in one time frame, or in 1 minute, for example. So right here on the S&P 500, you can see we're looking at minute charts. And so this is a 1 minute chart. Each bar represents 1 minute. So it has a little countdown timer up here in the top left corner. And you can see that it counts down how long before you get a new bar. So we got 30 seconds before we get a new bar. We're going to get a new bar every single minute on this chart up here. But down here, this is the Russell 2000, and it's a range bar 6 chart. So it means that it has no time involved. And you'll notice down here on the bottom, there's no timer down here on the bottom, because it just, every time the market moves 6 minimum moves, or in this case, 6 pennies, it's going to give you a new bar. And so we can make that as long as we want or as short as we want, just by we'll bring it full screen, and you see these little tabs down here at the bottom. We can come down here and you right click on that tab, and it can change the time frame right here. I got it set to range 6. We got some range bars here. See, this says range bar 25. So we can look at a range bar 25 or even a range bar 50 in here. And that slows the market way down, and you don't get as many bars in as short a period of time. But this market is moving quite quickly. And so it's nice to be able to have smaller bars, as long as it doesn't go so fast you can't operate with it. So you can just kind of look for the market to give you an opportunity to get into the market and take short positions. Remember last night we talked that we can go short, we can make money on the way down, or we can make money on the way up. We don't care. We just need to be right. All right. And so we need to, once we get into the market, if we're wrong, we just need to immediately get out so we don't lose a whole bunch of money, so that the next time we take a trade, the winner can pay for the loser. And the bigger the loser is, the more difficult it is for our winners to pay for our losers. So we want to cut those short. Cut your losers short, let your winners run. That's a true thing. All right. It's not just a cute little saying that we put on the wall. Now, if you go through a series of time frame where the market's just going sideways, and you keep trying to get in and you can't get in, and you can't get in, you can't get in, and it doesn't go, and it doesn't go, and it doesn't go, you got to know when to stop trading and not try and trade during that time frame, because that's just going to rip your wheels off. So what we do is we kind of wait until the market's already moving first. So wait until it kind of shows you that it wants to move. And this is kind of showing us that it wants to move again. So back here, you can see it was moving very nicely. And so we could take trades. And you're like, oh, well, that's a beautiful time frame to be trading. Yes, it is. All the way back, all the way into here too. This was very nice. But then we didn't know it was going to die like that, right? Until you start trying to get in and it starts to die. So once you lose a couple of times, you got to, oh, the market's dying on me. I got to slow down and wait for a market to pick up again. Once it starts to pick up again, you can start to trade again. And we've got some indicators in here to help us. And we've got a couple of nice indicators in here. As you can see, one is the Heikin-Ashi bars. If we turn that on and off, that's without Heikin-Ashi. That's a range bar 6 without Heikin-Ashi. You can see it's kind of rough. kind of scaly in there. It's a little bit difficult to trade. So we turn on that Heikin-Ashi bar, and that kind of smooths out our bars a little bit in here, makes it easier to see, and it makes our indicators work a little bit better with us. And we have this yellow indicator, which is the underneath indicator. And this one here I call the ATR, average true range. All right. And all the market's doing is calculating the average true range based on the settings I've got in the indicator, which are set right here, 1 to 1. All right. And so in the indicator, I've just got it set to 1 to 1. And that seems to be working pretty nicely on this market. And so if you get an arrow, you can just take that arrow and then trail up on the yellow dots and let the market go and see how far it wants to go. And farther it goes, the more money you make. If it doesn't go very far, well, it just gets you back out and you start and wait and try it again. And that's really all trading is. And then we can use these blue lights. I call these are magic blue lights, blue smoke of trading, because they kind of tell you where to draw your natural trend lines, right? So if you don't know where to draw your natural trend lines, you can draw them up here where these blue lights are. And oftentimes where the blue light turns, that's kind of an opposite, a reversal location as well. And so we talked about trend lines last night and markets having go through little patterns. And so as markets go through patterns, this is where you're going to get your setups and your triggers. It gives you the opportunity to get into a market. All right. So what we do is we look for those patterns or those breaking points, and generally they're just trend lines like this that we draw along the price bar highs, which in this case is called the resistance points, or the price bar lows, which is called the support points. So you have resistance on top and support on the bottom. And that ends up being something like, as you can see, that's a little wedge pattern. And the little wedge pattern, we saw those last night in our drawings in the class, right? And that's a little wedge pattern. And it actually broke out the top of that wedge. Now, it didn't continue to go. We'd have liked to seen that thing go to the moon, right? But it didn't. It died and fluctuated and come back down here and just started going sideways. And then it flushed and came back down. So you can see that as you look for a market to move through price and time, you're looking for these little patterns, these little breakout opportunities, and you want to have those kind of correspond with your underlying color coding of the bars, plus with the natural trend lines that you're drawing. So we're getting a little break right here. It looks like to me there's an opportunity to maybe get in long right here. So if the market long means, of course, that we think the market's going to go up, so we can come in here and we hit buy. And then if the market continues to go up, we'll make money. If it stops and turns around and comes back down, well, we just want to get right back out. We don't want to take a big risk. So I put a stop order right there underneath it that says, well, if it turns around, stops making higher lows, higher highs and higher lows is an uptrend, lower highs and lower lows is a downtrend. If it stops making higher highs, we'll just get back, or higher lows, we'll just get right back out. Now it's trying to break that blue light. So we're going to see if it's not going to continue to rally. And if it'll go up, we'll make money. And if it turns around and comes back down, we'll lose money. Now, as it moves up, we can move our stop up a little bit closer, right? We can move our stop up in here and not try and take so much risk. Now, we're still not in a winning trade yet because we haven't moved our stop to break even, because the low of that bar is still underneath our green line. So I'm kind of waiting right here. We're up 35, 40 bucks right now. We just need the market to continue to go. And if it doesn't continue to go, well, we'll get knocked out. At this point, get a little nervous. If you want to, you can bring that up to break even right there. It needs to go, or else we'll just get stopped out. No, we got stopped out. We didn't make any money. 20 bucks. So I guess that's, can't win them all. And if it doesn't, the sad thing is we might have got stopped out just as the market takes off and runs once again. And maybe we pulled our stop in too quick, but that's the nature of the beast. It depends on how scared you are to lose a little bit of money. You give a little bit more room to grow or be real tight in there. And, hindsight will tell you whether that was the right decision to get out or not. And it looks like it's not going to go back up anyway. So we're glad we got out. All right. So we're going to come in and look at a different market and see if a different market's not moving a little bit more in our favor. Give us a little bit of a move in here. So now we can come and look at the Dow, or we can come up here and look at the NASDAQ. And the NASDAQ's just kind of going sideways on that 1 minute chart. It's not doing a whole lot for us either. Kind of have to just sit and wait. The S&P, you can see, just going through a narrow sideways channel. That's another pattern where we got areas of resistance across the top and support across the bottom. And it's actually got a little bit wider bar in here. We got a little higher one up in here and a little lower one down in here. So we got kind of a little channel going on in here. You can see the market's just kind of going sideways. So we needed to break out of that channel before we get in. We don't want to really push it. you could get in when it breaks right here, but it's not been moving, so there's no indication that market's going to go. We want to wait for the market to actually be moving for us before we jump in. And it's been really weird lately. Usually the last hour of the trading day, the market moves a lot. It moves a lot. So we have good opportunities to make money. But these past few weeks have been really strange. The markets have been very active the hour before power hour. So pre-power hour, is that a word? Is that a thing? The pre-hour power hour. And so that hour has actually been a lot better than actually power hour itself. All right, let's come over and say hi to a few people. We got a few people saying hello in here. We got Chad saying hello. It's good to see you in here, Chad. And did you see Bitcoin drop? Yes, unfortunately, I did see Bitcoin drop. I have Bitcoin, as many of you know. I have a good share of Bitcoin, and it dropped on me. So there is that. And thanks for reminding me, Chad. I appreciate that. And also, John C. Gasly. You're saying I got no audio? You can't hear me, guys? My audio says I'm on. I can hear myself. Oh, no. Have I been talking this whole time? My audio says I'm on. Mic is back on. John, can anybody give me a sound check? Chad, can you hear me? He fixed it. Any sound check, Traden? We got you, Jeff. All right. I can hear. Okay. Sorry, John. It might be something on your end. Okay. So double check your own audio and we'll see what's going on. All right. So we got John saying, working after all working. Good afternoon. Okay. Okay. Working. I didn't see that. Okay. John Hoverton, minimum account for 3 trades. Minute in an account for the 3 trades. I'm not sure, John. I'm not exactly sure what you're asking. My min in an account for the 3 trades. Any $25,000, I think is what you're asking there. If you have anything less than $25,000, you can only make 3 day trades in the stock market. That's in the stock market out of New York. All right. So you can only make 3 trades a week in the stock market. In the futures market, which is where we're at right now, we're trading out of Chicago. You don't have that rule. So you can open your account with $2,000 and trade the micro minis, or open your account with $5,000 and trade the minis. Oh, look at the market starting to run while I'm sitting here talking. Of course, that's what it's going to do. Of course, it's going to take off when I'm not paying attention. That's the beast that we're playing with. No, it watches you. See, it's got a little. It looks at you. It says, "Oh, he's not paying attention. Let's take off and run." We had a nice little setup in here. This is the first little setup coming in there. It broke right there. Gave you the arrows. I guess if we had been taking each one of these, we would have missed right there. That would have been a scratch trade, and then that one we could have taken. But Lan was talking on the phone over here. All right. Bruce says, "Good afternoon, all. It's nice to have some new people in here, right, Bruce? Kirk's nice to see you. Jeff, nice to see you. Jeff's again in here. Jeff's got some things to say. We got you. Okay, Bruce, I can hear you. All right. Everybody said they can hear. We got Brooklyn Larson. It's nice to see you in here, Brooklyn. We got Boost Crate. Nice to see you, Boost Crate. I'm sure I just slaughtered that. And then we got Daryl Casto. Nice to see you guys. Anybody else wants to throw up your little say hello, your little icon? I'll make you famous. So it's nice to have you guys. And we are trading in the futures market, and there are no pattern day trading rules. So you can open up your account with as little as $5,000 if you can trade the minis, or $2,000 if you can trade the micros, and you can get started doing this. All right. So it just takes a special piece of software to connect to Chicago. And just so happens, I have a link right here for you. Let me get out of the way so that I can. So this is the software I'm using. And if you want to use the software I'm using, I like it because I designed it. Actually, we designed it in Chicago when I was back there working in Chicago. That's where we started designing the software for the traders back there, and they all helped me design it. And then, of course, my company designed the software. I've sold the company. I no longer own Track and Trade. I no longer own the company. I just obviously, since I was involved in developing the software, still love the software. But this is the version we're using today. This is the live futures version. So if you want pattern, if you don't mind $25,000 pattern day trading rules, use the blue version. If you don't want pattern day trading rules and you want to trade out of Chicago like we're doing today, use the futures version. All right. So pattern day trading rules, 25,000 minimum is the blue version. No pattern day trading rules, trade like I'm doing here today. With a small account, $2,000, you can do the futures version. So just go to trackandtrade.com, download it. You can use your little phone to scan that. I don't know why you would, though. That doesn't make a whole lot of sense because you can't run this program on your iPhone. This is a laptop desktop application. So that's one you want. That's one we're using. Go get that. A 6-time Stocks and Commodities Annual Reader's Choice Award-winning platform. Actually, it's 7 times. We've won it one more time since then. And that was why I own the company. I won that award 7 times. And so very proud of that. And let's get back to trading. Markets are going nuts over here. So here we are talking about things that we can talk about offline. So right now, let's come in here and look at what the markets are doing. We're getting, look at that big, beautiful move. If we were paying attention, let's just draw a dollar calculator. Let's say we got in on that little arrow right there, and we got out right there on that arrow. That'd have been $200. We got back in on that blue one and out on that. Well, we're still in that one. That's $250 on that Dow move. And so you're like, well, Land, how much would you have had to put in to put that up? If you come over here to the key, it'll show you we're in the day margin on peak. So you can see that right there, $750 for the Dow. Just figure $1,000 for each one of these. They fluctuate a little bit, but just figure that each one to get into one of these is $1,000 is the amount of money you have to have in your account to put one of these trades on. And then if you would have put in $1,000 right here, 750 right now, but if you put in 750, you'd currently be up about $300. All right. And that's better than a stick in the eye, right? Oh, look at this one down here. This is the Russell, and it's really running. Let's take our dollar calculator, and let's say we got into this one right at those blue lights, and we're in it there. That would be $1,000, and it's up $310. All right. So those are some nice moves. Now, these are the minis, not the micro minis. If we were doing the micros, the micro, you would have just opened up a micro chart. It's the exact same thing. It's Russell Micro versus Russell Mini. You can see over here in the chart window, you can come in here and you can say, this is the Russell right over here. This is the Russell. So you got 2 Russells. You got a Russell Mini and a Russell Micro. We're in the Mini. So if you would be in the Russell Micro, that would have been 10 times smaller. So instead of $300, it'd be $30. But instead of putting up $1,000, you'd only have to put up $100. Okay. But these are all the minis. All right. So $1,000 is our investment. And this market's starting to slow down in here. It just made a nice run. Whew, that was beautiful. And we missed it. So this is a 1-minute chart. Now you can see the differences here. This is a 1-minute chart. So you have less bars, right? Each bar was given in a 1-minute time frame. Since we did a range bar 6 down here, you can see that all these bars, those individual bars were broken down into little itty bitty smaller bars. And I kind of like that because what it does is it gives you a lot more bars in the same time frame. That gives you the opportunity to move your stops, move your indicators, and all that kind of good stuff that you want to do. It's just a smaller macro version or a macro view of the same thing. Okay, so these 2 are 1-minute charts. So your NASDAQ is a 1-minute chart. Your S&P 500 is a 1-minute chart. Russell is a range bar chart, and Russell up here, or the Dow is a range bar chart. We're getting ready to flush back down. Oftentimes when a market has a big rally like that, it'll flush and come flushing all the way back down. We can oftentimes take a look at how far that market has a tendency to move. And maybe from the bottom to the top, we have these little rulers that we can put in here, and we can measure how far back down we think that market might go. So we say, well, it'll probably come back down into what we call the delta cone of probability. All right, we measure that with a ruler called the Fibonacci ruler. So we can make these projections based on what we think these markets might do. We make forward-looking projections, all right? And on a longer-term basis, for this longer-term delta cone of probability, it says down in here. So we might get a little wave pattern like this and come back down into these cones of probability. Will it happen? Nobody knows, but it's just the probabilities. Okay, so you trade the probabilities, just like when you go to Vegas and you play blackjack. You don't know if just because she has a king doesn't mean she's going to flip over an ace and you're going to get 21. But the probability say is a lot better probability she's going to do that than not, right? So you trade the probabilities. Doesn't mean it's going to happen. It's just the probabilities. So we do that in trading. We want to map out what the probabilities are, and we use these different mathematical modeling tools to help us do that. All right. So here it comes, coming back down into our circle, which is kind of what we anticipate, right? Right down in here's the first one. Right down in here's the second one. We'll just wait and see if it does that kind of thing. Now it's been a little choppy coming down, which means it likes to go up better than down. These were beautiful moves. We were over talking about software when this happened. But you can see, just trade the arrows, land. Just trade the arrows. I know, I know. Look at this. Look at that market coming down right into our circle, just like we said. Now let's see if it gives us a little bounce in here. Just hit that bottom of that delta cone of probability, 61.8. That's kind of a magic number right there. Let's see if it'll bounce and come back up a little bit. Give us a little break in here, and then we'll probably see it come back down into this next circle. Just see it. Oftentimes as a day trader, what I like to do as an exercise for new traders is just sit here and see how good you are at predicting where you think the market's going to go. Don't trade it. Don't worry about trying to make money on it. Just try and see how good you are at predicting of where you think that market's going to go using these projection tools in here. And just practice trying to figure out where these markets are going to go and see if you can't get good at it. All right. And so here the market came down, touched our 61.8. It bounced a little bit, didn't quite go up as far as I thought it might, right? But it bounced right in there, turned around, started to fall once again, right back down into the next circle, right where we said it was going to be. There's 50%, right directly in the middle of the next circle. Now, if it comes down to the golden ratio, it'll come down to 61.8. So we'll see if it'll come down there. But right now, it's sitting right dead center of our longer term delta cone of probability. And that's pretty cool that you can make those predictions, right, using these tools. So that's how you decide where to get in and get out of the market based on market movements through price and time using mathematical modeling. And it's pretty simple stuff. We just want to look at where markets are trending and moving and how far they move. They have a tendency to go 2 steps forward, 1 step back, 2 steps forward, 1 step back. There we go. We hit that 61.8, just like a train on rails. Now it's still going down. We got one more support level down here at 78.6. So we see if it goes down there. Usually it doesn't. Usually it stops dropping at 61.8. So we'll see if it'll stop dropping right there. In fact, a lot of people will put an order in right there and say, hey, I think I'm going to go long right there off of that bounce right now. They'll get in right here. Now, it doesn't mean it can't come down here. It certainly can. But this 61.8 is oftentimes where it stops. So you could put an order in there. A lot of guys will do that. I'm not so much a fan of just saying, oh, I'm just going to randomly put it in there on the 61.8. A lot of guys will do that. I like to watch it break a little bit. I like to watch a little bottoming pattern, that little head and shoulders formation we talked about last night in class. I'd rather see that rather than just saying, well, I think it's going to bounce at 61.8. But it might. You never know. If it'll go up and break one more time, we'll put on a second one. Right now, we've only got one contract on. We got the blue lights coming in. We got the yellow lights bouncing here at 61.8. Lots of people are going to be buying right in here. We're going to see volume start to increase to the red side or to the green side. Oh, they're faking us out. Are they going to fake us out? Or is it just going to go sideways here for a minute? Oh, it's going to flush out the bottom. We don't want it to flush out the bottom. Is it going to come all the way down to 78.6? We don't want to see that. Don't do that, guys. Don't go down there. Oh, look at that. It's going to go all the way down to 78.6. That's a pretty sad move right there. I didn't like to see that. Let's see if it'll go up and break our yellow dots. Now I'm hanging on a little bit too long here. You saw we had a nice little drawdown in there, but we had that 78.6. It just had to touch it, didn't it? It couldn't not touch it. It just had to. It's kind of like a hot plate, just like touching the stove. It had to go touch that number. It's like a stove. It had to go touch it. Let's see if we can't get something going along here. See if it won't turn around now and go back up. All right, let's clear out all of our mathematical models because it's managed to hit all those. And let's do another model here. I'm going to come in and do another Fibonacci model on here. And so I'm going to go off of this one here. We're going to go here. And I went from that one before. We're going to go from the very low to the very high, back to the bottom here. And that's kind of the next move we're going to anticipate. So we're going to look for this market to come in here and make another move high. All right, so we're anticipating a continuation of the uptrend at this point. Now we're long 3, and that's only $75 right there. Let's zoom back in. All right. Now we're getting a little nervous if we want to, because we might get a little nervous in here. We could take a couple of these off if we want. Take a little profit right now. Take one off. Put a stop in here at break even. That didn't work very good. That put us in longer. I dropped it at the wrong place. That was my fault. Now that's okay. We're gonna see if we won't go long in there. We'll drop one in here at break even just in case. Now we're gonna look for that thing to keep going up. Come on, baby, rock and roll now. Nope, it says I ain't gonna do it, Lan. I'm too tired. Come on, get her up there. Get her up there. Let's put another stop in here in case it flushes on us. Now, right now, we got those little yellow dots in there. And I want it to stay above those yellow dots. Come on, baby. And we took one more off. Come on. You can do better than that for me. Break higher. There we go. Come on. You can do it. You can do it. You can do it. Do it, do it, do it. Okay, we're going to come in here and we're going to put our stop right here. And if it comes back down, we'll just get back out. Don't come down. Don't come down. Don't come down. Oh, come down anyway. After all that, took away our money. Are you going to go short right here? Not really. I don't really want to go short right here. I'm kind of bullish on this market. I think we had our big 50, 60% pullback. Now I think it wants to rally again. I think we want to see this market go back up. So I'm going to look for an opportunity to try and get in long once again, see if it won't go back up and test those previous highs. Come on, Mr. Dow. So what we can do, there we go. We're going to try and get in right here. We'll put our stop down here underneath. And we just need it to go. We need it to go up. Trying to break those yellow dots. There it goes. Come on. I accidentally got in with 3. I'm not sure if I really wanted to have 3. If it goes up, we make a whole bunch of money on 3. I'll look like a hero. Come on. Give it to me. Give it to me. Nope. Says ain't doing it, Lan. All right. So it's dying here on the vine. So we got to wait for it to start moving again. Watch it flush out the bottom. You can take a short position. You can go short if you want to. And this is getting into a little ABC pattern. We got a little area of support, right? Oh, it just broke it right there, just as I was mentioning it. It busted through that previous low. So we could have taken a short there, and that would have been okay. It would have been a good move, but we didn't do it. Yeah, get out of the way there, you rotten dog. Come on. We got to throw that out because that model didn't work. Still flushing down. Where we got down here? Well, we got some areas down here. This is the low from the previous low. So it went all the way up there and turned around, come all the way back down. Well, that was a dumb move. And we didn't take it short either. I thought we might go up, get a little ABC pattern in here and go back up, test the high again. This market does not want to go up, does it? Look at that. Man alive, what an ugly market. Come on. Now it's trying to break new lows down here. That's not what we wanted to see at all. I didn't anticipate that at all. Let's come in here with our Fibonacci numbers to the downside then. All right, we go here, here, here. Of course, it would have been nice. There's 100% right there. Let's put this in the right spot up here on top. I think we go right there. And it came down a little faster than the market did before. But that's the 90, 100% zone right in there. Look at that. It came right down to the Fibonacci zone right there. 90, 100. It's bouncing again. Now, on this first bounce, I don't want to take the first bounce. Let's see if it'll come back, give us another little bounce, and then we'll go again, all right? I want to try and jump in too soon. You can. You put one in right there on that first arrow if you think we're just going to get a straight up. But let's see. Well, there it is. Okay, let's put one on. Oh, I hit 3 again. Doggone it. Get your quantities right, Lan. I didn't want to do 3. That's all right. We'll play 3 right in here. I think it's going to come back down. Might put on more down here. We'll get a little ABC pattern, that little bottoming formation. We got to get our money back. Get back-itis. We got some get back-itis going on here. I don't want to, for my first demonstration of the new class, go home red with a losing day. That wouldn't be very cool, would it? Oh, it already stopped us out in here. Let's see if there's the second one. There it is. Oh my goodness. We can't trust it. We can't trust this market to go back up. That's from 100. I'm going to go in here. We're going to go in. I still think we're going to get a rally. This is too much drop down. Come on. So let's fix that. Came in here, 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 here. So we were off by a little bit. Now, down, it's breaking low. Oh my goodness. Well, we do have the magic blue line down here. This is our VWAP. That thing acts like a rubber band and it pulls the market down there. I can't believe it's going to go all the way back to the VWAP. That's not good. 130.9. This is another golden ratio right here. So I want to see that. And then, of course, we got 161.8 down here. So you're going to go through all those? Man alive. Land, the trend is your friend until it bends or ends. All right, come on. Let's try again. Let's give it a little shot this time. Let's see if it's going to give us a little ABs, a little head and shoulders formation. That would be your left shoulder. That'd be your head neckline. That's your head. We get a little right shoulder in here. This is your right shoulder. They're really looking for a rally, and I've just not been very good at picking the bullish side, have I? And I let it go too far against me. Is it going to go down one more time, all the way down to the VWAP? That's a sell signal if it breaks that yellow dot right there. It's trying to hold. That's like a little shelf. I call those shelves in there. Look at that. Down it goes. Oh, my goodness. Why didn't you take it, Lan? It went too fast. I was going to. It just went too fast. Boy, look at it go. How many drives down? That's a third drive down. We got drive 1, drive 2, drive 3. All the way down to 161.8. Okay, we're going to have to move our head and shoulders all the way down to this one now. So this one now becomes our new head and shoulders. We'll put that in there. And then we'll anticipate a little right shoulder in here. Get up there. Okay, so it broke the yellow dots. Now we're going to see if we can't get a little bottom pattern in here. Three drives. I keep trying to go long. This market doesn't want to go up. It wants to go down. But after all that down, you'd think we'd get some up. So let's see if we can't get a turnaround pattern here and ride it back up. We got 15 minutes till the market closes. We're down $600. Okay, here we go. It's not the exact pattern I'm looking for, but that's a little bicep pattern right there. I'm bullish on this market now. Okay. Now what we can do is we can come in here, we can right click on there, add OCO. We can bring these down. And we can put that right at $619. Not that I really think it's going to get that high on this first run. But if it sits there, if it goes up there, we get our money. That's how far it has to go to get our money back. This is my stop. I don't really want that clear down there. We can come in here and we'll put that on the blue lights. Trail blue lights. Let's just see if this thing will move for us. How bad is it going to flush on this pullback? We might get that little right shoulder in there, knock us out. Might not be a bad day for the minesweeper. Oh, it's going to come back and stop us out with a loss. Well, that sucked. All right. Well, it is what it is. There is the little right shoulder it's trying to put in right there. Let's get rid of all these arrows. Get rid of this. Come on, Mr. Dow. Now it's going to try and break off that right shoulder. Is that the right shoulder? There it is. And land slow to the market once again. Doggone it. 15-minute bell till close. Now let's see you go, buddy. Let's break some wind. Come on. Add OCO. We're going to come in here. We're going to go edit. Oh, it's flushing back already. Oh my hell. That ain't going to do it, is it? Well, I was wrong today. I can't get that market to go back up. We missed that first run all the way up, and so it was thought that we were going to have a nice bullish run. This thing gave us 3 full drives all the way down. We didn't take any of them. Now on the way back up, it's just chopping the crap out of us. Shake my head. Now that I'm sitting here and watch it take off and go to the moon. It's just going to chop all the way back up again. There's 1, 2, 3. Drive 1, drive 2, drive 3. Is that all it's going to give us? No. Now that I'm thinking it's gonna go back down, it goes back up on me. 3 drives is usually what we get. Then we get a flush on the 3rd drive, but now it goes back up and stops me out anyway. Come on, you rotten little dog. Give me something to go off of. Is that gonna be our flush right there? What's it doing? What's it doing? Try it again. Edit. Trail. ATR. Just trail down on those little yellow dots. Mark is just chopping us to death right now. Come on. We got the 10-minute bell coming here in just a second. Mark will jump all over the place right there. 49. Let's go see what the other markets are doing. Look at that one. Oh, those topping and bottoming tails. That was a hard bugger to trade right there. That was impossible. We wouldn't have done any better down here on the Russell either. It's doing the same thing. It's chopping the crap out of us. The S&P, a little bit smoother. Is that thing 49? We're almost there. There it goes. There's your bell, 50. That's the big jump on 50. Some days we walk away with $1,000. Some day we walk away without $1,000. Let's see. We got 10 minutes. 10 minutes. We could do the Minesweeper. I hate to do Minesweeper to try and get us out of a hole, but we may have to do Minesweeper. I can't do Minesweeper on that one. Let's come do Minesweeper down here on NASDAQ range 25. Okay, Minesweeper. Bring it home for us. This is a true scalping strategy here. We were trying to catch a trend on that other one. We just couldn't get into a trend. That's a Minesweeper scalp right there. Oh, this is on a this is a mini. So what did we just win right there? Let me see what we just did. Close. We just closed out. What was that? 20, 40, 60, 80, 90, about $100. That's going to take a lot of work to get out of this hole we're in. What you going to do, Minesweeper? Uh, that one's backing off on us. Don't come back. Okay, we got that one. So we're bringing it back slowly but surely. Don't call me Shorty. Minesweeper is our secret weapon. When you get down, you can do the little minesweeper to try and get some money back. But it's a dangerous strategy. So try not to have to do minesweeper. I don't know if we're going to have enough time to get it all back with minesweeper. Look at minesweeper go. Look at that baby go. I don't trust it down there to go down anymore. But it keeps going down, doesn't it? That's going to be painful. That one doesn't go. I knew that wasn't going to work. I was just about to kill it. Come on, baby. Come on. That was a nasty one. Look at that. Minesweeper killed us. Let's try it again. Yeah, it keeps going down. Come on, Minesweeper. Look at that market, just dead. Dead, dead, dead. It won't go either direction. Well, we got one bad Minesweeper, and that killed us. Got to know when to stop. Got to know when to stop. But you got to know how to practice too. You got to practice. Mm-hmm. What's it gonna do? What's it gonna do? It's going to trend. Suddenly it decides it wants to trend when we decide we want to start scalping. We just keep trading. We just keep doing it. Uh-oh, that was a bad move there too. Try it again down here. You got to practice, guys. You got to practice. Practice all these strategies. Find out which ones work best for you, which ones don't work for you. I can show you the ones that work best for me. This is actually a good one, but we're kind of being really nutsy and crazy and going all out right now. We're just being stupid, but you know what? It's fun. So you see what's possible, see what's not possible. Obviously, I don't trade real money like this, but it's fun to learn. So I'll show you some different stuff and you can see for yourself a little bit about what this is like. If you'd have just put one contract in down here at that yellow arrow and wrote it up, that'd be $650 on this market. It's a big market. That's why we're trying to do a little bit of scalping on there of course, that first one is the one that killed me. I put it in the wrong spot and I knew it was in the wrong spot. So the idea is you draw a trend line, and if it stays below the trend line, you stay in. If it goes back above the trend line, you get out. The problem is right at the very first beginning of the trend line, you don't want to take a bigger risk. As long as it stays below the trend line, you stay in. Same with the uptrend line. Draw an uptrend line. There's the end of the market. The market's closed. Okay, that's the stock market close. But since we're in the futures market doesn't close for another couple hours. I have another hour, I think, 3 o'clock. Let's go see. See, it closes at 3 o'clock. See, close time, 3 o'clock. And then it opens right back up again at 4 o'clock. Trades 23 hours a day. It closes 1 hour to do the accounting. And when the stock market closes, it really starts to, it dies. It doesn't usually trend very much after that. So you can't get much out of it. Yeah, we're just playing here in the aftermarket hours. See if we can't get a little bit closer to take a few things out of here. So there's a nice little winning streak. But there was our loser streak right there. That's where we got in trouble, right there. I put it in the wrong spot. And then that was the first time I put it in the wrong spot. I knew it was in the wrong spot. Of course, I'm using 14 contracts. Don't need 14 contracts. You can do it with one contract. Another nice little winning streak. You win small, you lose big when you do this. That's why it's kind of a dangerous strategy. Your risk reward ratios are way off, but your probabilities are way high. So if you play a really high probability with a with a high risk tolerance, oftentimes it works out. What was that? Did I get on the wrong side of the market on that one? No, we got that was all winners. Still climbing in the after hours. Look at it go. I don't trust it though. Boy, look at it go. That thing's gonna kill us. Ah! This thing's on fire. In the after hours, gonna go all the way back up to the VWAP. That blue line acts like a rubber band. Pull back, you. Pull back, pull back. Gotta learn how the tools work too. See how they work. I'll show you the settings for this tool. Here, I'll show you the settings. This is Minesweeper. And I put this stop way back there so that I can slide it up. And then last time I haven't been sliding it up so that it reduces the risk. You don't have to have it back so far. But that's the settings that we're using for Minesweeper. It doesn't come with the software like that. That's just something I program into it. Boy, look at it go all the way back up to the VWAP. Come on, go up there. Well, that was fun. Bunch of nice little moves there, but when it kills you in this strategy. Got to be prepared for that if you're going to do this kind of trading. I hope you realize I'm way over trading. Way over trading. Just playing right now. Just playing with the tools. Financial entertainment in a demo account. Get back itis. Come on. You see it count down? That was kind of cool. Come on, pull back a little bit. There we go. There we go. Oh, that was nasty. You watch that little tiny chart in the upper right-hand corner. That little chart is time and sales. That tells you every single trade going through the system. Come on, baby. Well, that wasn't good. Lan, what if I run out of money? What if I sit here and do this and I lose all my money? You just send an email into Track and Trade and say, I need more money, and they put more in there. They don't care. We do it all the time. I do it all the time. Do it all the time in your demo account. It's a little more difficult with real money to get money back in there, but with the demo account, it's real easy. You just send an email in and say, I need more money. And they don't even know how much you got in there. You just tell them how much you want. Can you put $10,000 into this account? They just do it. They can't see your account. They don't know what you've done. All they do is just tell them you want $10,000 in there. They don't know why. They figure it's because you lost some money, but they don't care. Nobody cares. Don't feel embarrassed. It's a demo account. It's what you're supposed to do with a demo account. You're supposed to practice. You're supposed to do things to see what they do so that you can get good at you can get a skill so that you can make money. And if you don't sit here and do this, find out what works, what doesn't work, say, oh my goodness, I better not do that. That lost me a lot of money. All right. That's a good way to learn not to lose money. It's better to do that in the demo account than it is to do it in a real money account. Don't be too anxious to go trade real money till you can trade fake money and make money. But you got to practice. You got to get good at the skills of the tool. Right? The software is very powerful. It'll do all kinds of stuff. So if you come to these classes, I'll show you all kinds of really neat things the software can do. It can do all kinds of automatic trading. It can jump in every time it gets an arrow. It can do all kinds of really neat things. You're like, oh, just trade the arrows, Lan. Just trade the arrows. You can do that. You can just trade the arrows. All kinds of things you can do. But I thought you had the magic secret formula. There's lots of magic secret formulas. I'll show you all kinds of them. Look at all these I got. Look at all those magic secret formulas for that button. What about this button? Look at all those magic secret formulas. What about a whole bunch of magic secret formulas for that button? I got all kinds of magic secret buttons for that button too. I got all kinds of magic secret formulas. I can show them all to you. You have to decide which one works best for you. We obviously got screwed, blued, and tattooed today, but it is what it is. You got to practice. You got to practice. Let's get rid of this. Let's see if we'll move it in there. All right, we're losing all of our energy. This thing's not got anything else to do. So, all right, we played, we learned, we tried. Oh, let's go one more time. There we go. And we ended up practicing and had some good winning streaks, made some mistakes, had some bad moves, had some bad luck, had some good luck. In the end, we learned a lot. We learned a lot. It's a very educational day. So we will do it again on Wednesday. Actually tomorrow is Wednesday, and we're going to do stocks in the morning. All right. And we will practice trading stocks in the morning at 8 o'clock. And we'll be using the stock market version of the software. So this version over here, we'll be using the blue version. So that's the version that we'll be using tomorrow morning at 8 o'clock. And we'll look for longer term stock investments. And we'll practice that. And then on Thursday, we'll come back and we'll do the futures version again during Power Hour. So you guys get your software, practice, and do what we did today. Just play and have fun with it. All right, because that's the best way to get in there and learn. If you don't feel comfortable pulling the trigger, and look, I'm down $10,000 today. But did we learn anything? Yeah, we learned a lot. I mean, it was a good day for a first day to get back in class and start to learn what the software will do, what things do. Practice. Don't feel bad clicking the button. I mean, look at Lane Turner sitting in here losing $10,000 just practicing, goofing off, being silly, having fun, but that's how you learn. Don't be afraid of the software. You can't break it, and anything you can do to it, I can get back. All right? So just come along, ask your questions, and we can have fun, and we'll do it again next time. All right? All right, guys, take care. We will see you.